their membership numbers and name in the chat box, because it's of no use. It's on because the Zoom gives the attendance directly, and we are also keeping it on YouTube. So the moment it pops up, the speakers I go there, and you don't know, and the questions can come only in the Q&A.
Q&A. Yes, Pankaj.
Just 30 seconds to go. You can take over. Sorry.
Chairman sir, with your permission, should I start?
Yes, sir.
Good evening all. On behalf of Hyderabad branch of SARCF FCI, I welcome everyone for the last day of the 3-day virtual seminar on company side. I welcome Chairman of Hyderabad branch CA Macharra Minavalli, immediate past Chairman CA Pankaj Kumar Trivedi, and past Chairman YV Banayandra Garu, and all the senior members of the screen and members of the screen. I welcome CA Dayaneva Sharma, Central Council member. I welcome to the speaker of the day, CA Chintan Bhai Patel from Ahmedabad, who is going to address us on accounts of companies, company account rules 2014, audit and auditors rules 2014, including CARO. Now I request CA Macharra Minavalli, Chairman of our branch, to give welcome address and overview of the program.
Yeah, thank you, Secretary sir, and respected Central Council member CA Dayaneva Sharma ji, and Speaker of the day Chintan N Patil, and our senior members Banu Narendra sir and Pankaj sir, and the Secretary Satish Kumar, and all the senior participants and delegates. Good evening and warm welcome to this third day of this webinar on Companies Act 2013. Friends, today we have with us CA Chintan Patel ji from Ahmedabad to speak on accounts and accounts rules. And accounts, we all know, is section 128 to 138. And we also requested sir to cover an audit, that is section 139 of the Companies Act 2013 to 148, and also rules. Along with these two topics, I also requested yesterday, sir, there are a lot of amendments which are there in relevant topics, in like in a CARO amendments, etc. That's what I requested sir to cover the amendments wherever possible along with the sections. So I request delegates to stretch on further 15 to 20 minutes to cover the new amendments also. Chintan sir is a Regional Council member of WRC of NICA for the year 2000, for the term 2019 and 21. He's also past chairman of Ahmedabad branch, and he's a chairman for the 2017 and 18. And friends, sir is an author. Not only author, he speaks on various topics of the Companies Act, income tax, etc. on various forums, on ICA and other forums also. And he's also contributor of various articles to the various magazines. Thank you, Chintanji, for accepting our invitation and joining the webinar to share your valuable knowledge. And once again, I thank Dayaneva Sharma ji for referring your name and requesting your support to Hyderabad branch. And thank you all. I request Secretary sir to take over for further proceedings.
Thank you, Chairman sir. Now I request to CA Dayaneva Sharma, Central Council member, to address the delegates for today's topic, please.
Thank you, Secretary. Thank you, Chairman. And permanent chairman, number 2 permanent chairman, and number 3 permanent chairman, all of them. It's always a pleasure to be involved. And more importantly, chairman ensures that I attend most of them, Chintan. So first of all, welcome to Hyderabad. So you are a second debutant to come from Ahmedabad after Aniket Bhai. So you have a very big benchmark to handle. Aniket Bhai, I think always I tell him you never contest from Hyderabad. That will become a problem for me because he's become more popular.
Yeah, that is true.
That was on a lighter side. But yes, you have always been speaking across the length and breadth of the country, and more importantly, being part of the WIRC as a regional council member, your contribution has always been appreciated across the board. And today, to talk on one of the most crucial topic, you are actually come here to Hyderabad for talking on the nervous system of our profession. I think accounts and audit is the nervous system of our entire profession. And today we are deliberating, and we are seeing a lot of expectations which are coming from the regulators, from the government. The best part is that number of sections are limited. If you see in the entire Companies Act of 470 sections, there are 10 sections which are actually being part of our entire discussion process. But the entire Companies Act revolves around the signature of a chartered accountant. There might be a situation where a promoter can go wrong. The expectation is there might be. People are thinking, okay, there might be wrong. That is the reason chartered accountant is there. That is how the thought process has been there. And we are actually equated in the process where your responsibility lies on us in more than one ways. Pankaj Bhai, Bhanu sir, both very important point to note. In the Ministry of Corporate Affairs, there was a detailed deliberation happened last year with regards to the consultation paper, which talked heavily, I am talking about, which talked heavily on the responsibility of the auditors and not restricting it to only that number of sections. They said there are certain definitions which are beyond your expectation. They cannot be written in words or sections. Ultimately, what it means is you are Bhagwan, Aham Brahmasmi. That's it. So you have to ensure that the fraud is also taken care by you. If there is any deviation which has been noted, that is taken care by you. Non-compliance of laws are to be taken care by you. Reporting requirements are taken care by you. The entire responsibility, once the financial statement are presented to the auditor for purpose of audit, that means the responsibility lies back on you to ensure that everything is perfectly right. That means the role, responsibilities, duties, and obligations of an auditor become very critical in the entire process. And the expectation, particularly with regards to time and again, which we are seeing, one of the most important part, Bhanu sir, which I have been talking to you every time, is with regards to why we had a deliberation, why only one auditor does wrong and then you are a headline in the newspaper. I think we should actually tell ourselves that, that is the power of a professional chartered accountant. If even one does wrong, the flaring is very high. So these duties and responsibilities are becoming very critical. And in the Prime Minister's statement 2017, he very clearly said, your signature is powerful than mine. So undoubtedly, his returns are also to be filed by us. That we have to remember, because the Constitution, the laws, the acts particularly specify that without a chartered accountant, nothing can move forward. So we are carrying a different kind of responsibility on our head. And Chintan, today the responsibility lies back on you to convince each and everyone the power within which we all are living. And I think the attitude with which we need to get up, walk, talk, move, perform our professional job will make a whole lot of difference in people's mind. Aniket has always been talking about one thing. I'll just give you one simple example. Just imagine if you are going to a hospital, someone is going to a hospital, and a highly educated doctor comes on a short and a red t-shirt and with a colorful headphones on him, and he says, chalo, I'll come and operate. Will you go and get yourself operated? The answer is big no, right? So similarly, when any client is reaching out to us, I think the way we carry ourselves, the way we have to believe in ourselves that we are chartered accountants and we are actually the financial doctors of the nation in more than one ways. So welcome to you, Chintan Bhai, and look forward for your engaging session for all our members. And I wish you a best of luck, nahi bolunga. I wish you a thank you, big thank you in advance, because I know your capability, and you will actually take our members on a drive. Thank you very much. Thank you, Chairman, for inviting me.
Thank you, Daya Bhai. Now I request CA YV Banaran Rao, past chairman of Hyderabad branch, to formally introduce the today's speaker.
Thank you, Satish ji, and thank you, Chairman and friends on the screen, dignitaries and friends on the screen. Thereby, I'm a little nervous to introduce the speaker because I'm in a red t-shirt today. So I hope I hope the speaker doesn't mind, and I will carry on with my job, sir. Friends, we have with us a chartered accountant who is not only an FCA, but CPA and CS, certified IFRS of ICAI, DISA of ICAI, and CISA of USA. He is presently regional council member of Western India Regional Council of our institute, elected for the term 2019-21. He was the past chairman of Ahmedabad branch for the year 2017-18, and under his chairmanship, Ahmedabad has the distinction of receiving for the first time all the 4 best awards of branch and student at both national and regional levels, and that is proof of his leadership capabilities. Not only an eminent chartered accountant and a leader, he is also an author. He has co-authored the book on Quick Guide to Ind AS and ICDS published by Taxman. He is contributor to an Android application, accounting auditing source. He's practicing for more than 18 years now and is the mentor, editor of Knowledge Update channel of the YouTube. And he's a regular speaker and trainer at various forums with more than 300 presentations at various seminars in India, Dubai, Muscat, Salalah, etc. And his articles are frequently published in our ICI journal and newsletters. And Chairman of Accounting Standards Ind AS IFRS Committee of WIRC for this current year, that is 2021. He has hands-on experience of Ind AS, International Gap Conversion, Companies Act 2013, Risk Advisory, GST. Today, we will be having Chintan Baitak. We'll be having Chintan Baitak on audit of companies Lekha Pustak, and who is going to tell CA Chintan N. Patel from the city of Ahmedabad at the program conducted by ICA Hyderabad. Welcome, Speaker Sir, Chintan Patel ji, over to you.
Thank you, Banu sir. Chintan sir, now the screen is yours.
Thank you so much. My special thanks to the dynamic CCM Dayabai, because whenever I have a discussion with Aniket, he always makes same like things which you are doing for Aniket. He always acknowledge that Dayabai and Aniket, they both are doing the young CCMs, and they are doing very many innovative things, new things in councils. And under the leadership of Dayabai and Aniket, I think ICI is doing fantastic task, fabulous task for the ICI and fraternities. Sir, thank you so much for giving introduction. My special thanks to again the chairman of Hyderabad branch, Mr. Rao. He has talked with me yesterday also just to see that everything is right. He's ensuring that the program which is organized by Hyderabad is perfectly done. And with the support of MOC, the secretary sir is doing fantastic job, and he's trying to ensure that everybody is intact and perfectly done. So Satish ji, thank you so much for this. And I also got privilege to talk with the pillars of Hyderabad branch, the immediate past chairman Pankaj Trivedi ji and the past chairman Bhanu Narayan ji. Very good words, and the way you all are doing activities for members, I think I must appreciate. The kind of activities which you're doing from Hyderabad branch in COVID-19 per se is definitely required to be appreciated, because this is what we today want. We all are together as a one part of the group, and whatever we can do, we must do it. So under the able leadership of both of you, Hyderabad branch is doing fantastic things. And when the Dayabai is there to take care of it, there's nothing to worry about that. And one more thing is that, as he has already pointed out, one of the most important thing for the today's topic, I'm just trying to take from what he has left. And thereby he has touched upon the few very important things. And to start with, the Prime Minister Narendra Modi has said that the signature of CA is utmost important than the signature of PM. Just look at the importance given to the signature of CA. So when we talk about ourselves, we should have that kind of responsibility on our shoulder when we sign anything. If any clients come to say, sir, sign kar lijiye, just do sign for the sake of doing signing, I think that means the value of signature will come down, and we have to say it is not just sign, it is the most and only sign. That's why you have come here, and that's why I have to do my duty to ensure that this signature of CA is justifiable. So a lot of responsibility is there on our shoulder. And as the Bhai has rightly mentioned, that government and regulatory is taking auditor as one of the most important person, because they are the only external wing in the whole stakeholders. Internal auditors there, bankers is there, others are there. But if you look at the first external shield for any fraud and scam is nothing but the auditor. And that's why they expect the auditors to perform not only as a person who is signing and being part of management, but somebody who is going to blow whistle just to ensure that everybody others are aware of what is happening here. So with this brief word, let me share my screen and I will take to my presentation. and we'll discuss. I know, understand that the sessions sometimes may become a little bit basically theoretical, but yes, there's important for all of us to really go through sections, because sometimes you may feel that section 138, books of accounts, where to maintain. I think we all know it is to be maintained registered office. There's nothing more to discuss, but however, there is critical to understand and know the rules and regulations which is underlying our requirements. As thereby mentioned, the section 450 sections of the Companies Act. Out of 450 sections, we should be aware completely about each and every word for the accounts and auditor sections. This is what is driving us for one of the most important opportunities for chartered accountants being expert in the Companies Act 2013. So with this brief word, what I'm going to cover here, I'm going to cover primarily on
Chintan, the screen is not coming, I think.
Not coming? Achha,
No.
It's a blank white thing which has come.
Okay.
We all are here.
Open the PPT and then.
Yes, now it's visible?
Yes.
Yeah, instead of PPT, I've selected a whiteboard. So whiteboard was coming, right? Okay, so let us come and look at the very, very important thing. Today's presentation, I'm going to focus on the accounts of company, section 138 to 138, which is primarily focusing on what should be financial statements, what should be the data's report, which are the important provisions of maintaining of the accounts and records, signature of the auditors, which is covered on audit and auditors rules. Then we're going to focus on the recent amendments which are there on the auditors rules, accounts rules, and if time permits, we'll focus on schedule 3. So however, the primary focus is on the accounts rules and auditors rules. Let us first understand these accounts of companies, the sections which is dealing is 128 to 138. Now, if you look at these sections, somehow you feel that these are the sections with respect to the accounts to be maintained. But however, as an auditor, we are closely functioning and closely working towards the accounting part. Practically, in various companies, we have been closely working for financial statements and notes and accounts also. So even though they are related to accounts, but we are also having a lot of responsibility to understand that what is the requirements of Companies Act 2013 for accounts. When I look at the schedule of the whole schedule, I think the first section was primarily on the loans and deposit sections. I think that is what is one of the most crucial, because it is affecting the financial statements where the fund is involved. Everybody is being everybody is concerned with the funds, because the first thing for anybody to form the company is to ask question that can I borrow fund from XYZ persons? Can I transfer a fund to third party? So these are the questions which are generally relevant as far as the loans and deposits is concerned. Second section was on the director's duties. And now this third section is primarily for a chartered accountant. If I talk about one very important thing is that this auditing is a profession which is the only profession that can be done by only chartered accountants. And we have to be very proud enough for these auditing standards and accounting standards that anybody, no one is going to really learn AS or standard of auditing. Because GST, yes, we do have a tax practitioners, income tax, we do have tax practitioners, anybody can and is doing a work on GST income tax. But as far as auditing is concerned, it's only and only a right and privilege of a chartered accountant who can handle that. So when a lot of privileges is provided to us as a chartered accountant, I think there is also a lot of duty on our shoulder. And when I talk about the duties includes on us to ensure that the provisions of Companies Act, provisions of the accounting standards, requirement of standards of auditing, requirements of laws and regulations have been complied with it. So that's why the duty on us to see that we have to know and we have to understand the actual technical aspects of these sections. So let us look at the bunch of sections which we are focusing right now. That is section 128 to section 138, which includes first on books of accounts to be kept by company. Then there is a financial statements, periodic financial result, section 129A, that has been inserted recently, and where when you look at that particular provisions, it gives a feeling to us that in the futures for unlisted companies, government may call for the quarterly returns. So section 129A is a newly inserted sections where there's a possibility of potential more information may be required, not year basis, however on a periodic basis, which may be a quarterly or half yearly. Then there are a few sections which focuses on the reopening of accounts and voluntary revisions, because these both things requires if you look at the old Companies Act 1956, in that case there was no sections like reopening of accounts, but I think there's a need, because if you look at the Companies Act 2013, the many sections, many provisions have been inserted because of the Satyam fraud which was happening in that particular period. So the Companies Act 2013 has been completely changed and modified, wherein a lot of provisions, particularly on auditors provisions, has been inserted because of the certain things which happens in that requirements. Then comes NAFRA. I think there is a lot of discussions and interactions on National Financial Reporting Authority. And when NAFRA was about to come, everybody was curious, and there has been a lot of discussions about the role of ICAI has been reduced drastically. We'll also focus on NAFRA when we discuss about this. But in my view, yes, NAFRA is a body, and in my view, after around 7 years, still the NAFRA is not in a position to really focus on these things. But now the time is short, and I'm very much sure that NAFRA has a lot of things in their mind, a lot of things in planning, where they are going to discuss and review the lot of forms which are filed by the auditors and running companies, and then NAFRA will definitely issue certain kind of inquiries, certain kind of information which may be called for their review and comfort. So till now, last 7 years, NAFRA is not in the pictures, not in action, but however, it is going to be there very soon. So we need to be really cautious about what we do. Then there is sections which focuses on accounting standards. Then there are section 134 which focuses on the financial statements and board of directors report. Now these two are one of the most important piece as far as the annual report is concerned, and with which we are affected. The auditors are being directly connected with these financial statements. Then comes section 135, that is on corporate social responsibility. See, this section 135, if you look at it, has really have a huge impact on the government and the companies. A lot of responsibility was casted upon the companies as far as the spending on the CSI is concerned. Actual spending was always question mark. That's why the government now wants that the spending should be really done for the needy persons who are really desirous of these things. That's why section 135 is now very critical, and I'm very sure that the way government is functioning, the probably a lot of many things are going to change as far as CSI is concerned. Section 136 is which is focusing on right of members to the copies of audited financial statements. Then 137 is on the copy of financial statements to be filed with registrar. And lastly, section 138 is for internal audit. If we just look at all these sections, somehow we may feel that it is more revision. Revision of what we have been done, what we've been doing it. However, why this revision is required? Sometimes you may feel that there is no need to look at the books of accounts where to maintain. There's no need to look at the voluntary revision because there is no need for me to revise the financial statements. What about the NAFRA? What about the board of directors report, CSR? These all things may or may not be required actually in your practice. However, the most important thing is that we have to be aware. We have to be focusing on what is needed and what are the provisions, and we have to be aware about these things, because the way the dynamisms are being changed, the way it is being changing, I'm very much sure that these all provisions will be definitely immensely useful to a chartered accountant, because as a chartered accountant, it is obviously being believed that we are aware about all the sections. Now, these particular provisions, the focus is to have a revision of the sections And then just to have understanding of what is being included in the sections. That's why we can keep eye on this and can do planning as required. Now let us look at the first section, that is section 128, which is with respect to the books of accounts. So we have been listening and we are aware about that from the day one itself, that the accounts or books of accounts are required to maintain when it has to be maintained at registered office. So if I look at the compliance, you see, I'm also trying to address a few other things along with these sections, because if I just look at the sections becomes more boring, because they are primarily, principally the thought process of the rules and sections. Technically is are there. However, if practically if we focus that the registered office should have the books of accounts, and there has to be a minutes of meeting shall be maintained by company at registered office. Why I'm addressing about minutes of meeting, because in practical situation I have seen in many cases the minutes of meetings are not maintained by the company, and that may be the gross violations. As if you can look at the amendment which is done by the government in various cases, the focus is to look at the non-compliances, and the non-compliances which may affect the stakeholder. That is the primary focus. Secondary focus is to ensure that the compliance should be done in a spirit. There is a debate on whether to incorporate a LLP or whether to incorporate a private limited company. And whenever there is a debate between LLP and private limited company, the private limited company is always preferred for somebody who wants to follow and do the business systematically. Because when the image comes as a private limited company, the image is that that company is bound by set of rules and principles. Second thing is the company is bound by the auditing requirement, and the auditor is there to see and ensure that the rules and requirements of Companies Act are complied with it. So minutes of meeting, books of accounts, I have seen in many cases where they are not maintained. I think minutes should be maintained. As far as books of accounts is concerned, the books of accounts should be kept at what register office. However, except as decided by the board, in case the board believes that no, because registered office is just address when they started, and they have really moved to another place which is a corporate place where everybody is sitting there, and the accounts team, every team is being there at the particular office. In that case, it is possible, it is permitted that the books of accounts may be maintained at some other places, provided the board of directors has to decide and approve, and they need to the file with the registrar about the address at which it is being placed. Now, why this particular provision is critical? It is critical because if the books of accounts are not maintained at the registered office, and the intimation thereof is not filed with registrar, in such case there is a possibility that if something happens where the regulator may have to go to the company's place for access, and then if it is not available, it will be definitely a non-compliance of the requirements. So as a part of the company and the officers duty is to ensure that the books of account are required to maintain at the register office, and if it is not in certain cases, then it is to be filed with registrar, it is to be intended with the registrar. Next point is that it is we have been learning from the ages that books to be kept on accrual basis and accounting is to be on double entry system. Now there is no exceptions to the accrual system, and here it has been very clear that this to be on accrual system. Under Income Tax Act, for professionals, like that is they may allow to keep the books of accounts on cash basis of system. However, for a company, when it is company, there is no exceptions to ensure that the books has to be on accrual basis of system. On 31st March 2021 also, ICAI has issued one announcement whereby they revise the level 1, level 2, level 3 level 3 enterprises for non-corporate accounting standards requirements. Why this is critical is that earlier the non-corporate, which are non-corporate is non-company, now it is changed to non-company. So non-companies are required to maintain accounting standards as per the classifications into level 1, level 2, level 3. Now this level 1, level 2, level 3 has been modified with 4 levels 1, 2, 3, 4. And now these changes are effective from 1st April 2021. So the purpose of drawing these, that even for the non-company entities, there is a need to maintain their financial statements as per compliance with accounting standards, as per the framework which is being provided by ICI with respect to the non-company accounts. So books are required to be kept on accrual basis and according to double entry system. Now we are in the age of technology, and everybody is working on so hard to just to ensure that Dayabai and Aniket both are working so hard to ensure that the government, the ICI is also at topmost on technology point of view, right? We have digital library, where in digital library we have all the records, all the materials, presentations, videos are available. Same way in this ages, it is also permitted to maintain your accounts in electronic mode. Obviously, there is no need to maintain your accounts in manual mode. It is permitted to maintain accounts in electronic mode also. Coming to the next point is on the branch office in India or outside India. So what will happen where I have a branch in India or outside India, whether I can maintain my books of accounts at registered office, or I have to maintain only registered office, or I can maintain also at the branch office, because the companies may have branch across India, they have branches also outside India. So what should be the situation? Is it allowed? So I think here the Companies Act provides the guidance that the books can be maintained at branch, and the quarterly submission of summarized returns to the company at the register office, if it is submitted, is okay. So as an auditor, sometimes the situation come into picture where you may be asking for some data, and the company is unable to provide the data for branches. They're saying that the branches are maintained at the branch office. However, here in these junctures, you can step down and you can say that no, as per this particular section 128 of the Companies Act 2013, you are required to ensure that the branches are required to submit the statement, summarized returns on at least a quarterly basis. So in that case, the information should be available with the company as far as this is concerned. Next comes a period of maintenance. Maintenance is for at least for 8 years. Now this maintenance record is critical because if you are able to maintain records, then only the government or regulators would have the access to the records. So for 8 years, you would ensure that the accounts are maintained. Now 8 years is to be counted from the immediately preceding financial year. So if we are basically year is 21-22, then 2021 is the last year, and then from that you have to count 8 years. So you have to maintain at least for 8 years. And when we focus is on the amendment which is done by the MCA on the recent amendments for accounting, where the audit trail requirement has been entered into, and in audit trail also the MCA has mentioned the fact that the audit trail should also be maintained for 8 years, because it is in compliance with the requirements. Inspection of books of accounts maintained in India. Now, if the books of accounts are maintained in India, they are open for inspection during business hours by any director. As I mentioned that obviously any director can maintain, can inspect during business hours. If it's maintained outside India, that is where there is some issue where what is needed is that there has to be a written request by a director. And then if the written request is received by a director, then companies to submit within 15 days of written request by a director. If you are a auditor of a holding company, and if you need to inspect the books of accounts of a subsidiary company, then as a director, the board of directors should basically, they can authorize somebody on their behalf, and then they can get access to the accounts of subsidiary company also. So these are mainly accounts, mainly the process on the section 128. Let me see if you have any questions. We can Okay. Right. So I think, Velanji, yes, definitely I will provide my presentation immediately once this is over. And okay, another question is that.
Chintanji, can we take a questions at the end so that it's comfortable?
Okay.
It is such
Sure.
we can take.
Sure.
Members, yes, will share the presentation in Hyderabad website and we'll take with the permission of the speakers. And request you to please don't post in any name and membership number in the chat. Please carry on, sir.
Okay, the chairman sir has stepped in to see ensure that we can continue perfectly. But sir, if chairman sir permits, sir, I would like to take few questions in between just to have also a little flow interactions.
Done.
Yeah. Okay. Just focus is that I know that this is particular more little more technical things where many things I have to share. So if for certain period.
Your convenience, sir. Your convenience, speaker, sir. Your convenience.
Thank you,
please.
Yeah. So, as one question which I received is whose responsibility is the preparation of financial statements? I think the responsibility lies on management. Even if you refer to auditor's report, because in my humble submission to everyone is that before you sign the audit report, please read once. If I ask you questions to around 100 auditors, if I questions, then will be minimum only 5 or 6 will be have gone through the auditor's report. The rest all is signed. So my humble submission to all of you. Why? See, it is applicable to all of us, including me. Because sometimes we don't have time to go through everything. But I think we need to spend at least one time to go through the audit report, the content of audit report, because in the audit report, it is clearly specified that the responsibility of preparation of books of accounts lies with the management of the company, and our responsibility is to just express opinion on true fairness of the financial statements. So books of accounts need to be maintained by the management. The responsibility lies with them. Our responsibility primary is to check and verify on this. Right. Okay. Okay. Sundar Hegedeji has mentioned whether maintenance of books of accounts is compulsory for company under liquidation at IBC. Sir, as per IBC Act, I'm not very much sure on under IBC Act. So we need to really go through IBC Act. In my view, books of account has to be maintained. Whether there is no exception as far as IBC is concerned, the accounting methodology can be different. Because once you're under IBC, you are under liquidations. Your accounts may be maintained on different basis of accounting. But however, books of accounts should be maintained. Time limit for informing to register if the books accounts maintained other than register office by a private company. Sir, time limit is 30 days. But yes, I need to exactly check the number of days, and all these things are very, very particularly being done at 100 places across the countryside. So I'm not very much exactly sure on number of days. But sir, these are very procedural things we can verify. If you want, I can check and I can get back to you on these things. Srinivasji, okay, now I'm getting a lot of questions. I will go back to the next and then we'll come back again. Because then, so what I will do, I will come back to your questions a little bit later on, so that we can also ensure that the flow of the presentation should also align. And then just to ensure that we have a more interaction, I will come back again. So now coming to the next point is on financial statements. Section 2, subsection 40. See, why I'm focusing financial statement, because the Companies Act is a primarily defining in section 2, subsection 40, what is a financial statements. Financial statements includes a balance sheet, profit and loss account, cash flow statements, statement of changes in equity, and explanatory notes forming part of the above statements. See, one very important thing is that as the profit and loss account is concerned, if you are a company which is not in the profit making entities, you are not in the business of a profit, it's like charitable kind of thing, then you can have income and expenditure account also. As far as cash flow statement is concerned, cash flow statement, there's exceptions to a 1% company, small company, or a dormant company. 1% company is a company where only there's one member. I think that is very clear. A small company, I think the small company definition is provided where the paid up capital of a company is 50 lakhs rupees or less than 50 lakhs rupees, and turnover is less than 2 crore rupees. In both the cases, if the both conditions fulfill, then it is a small company. So again, if a company exceeds the turnover with more than 2 crore rupees, then yes, it is not a small company. Or if it exceeds the paid up capital, so any of these things are exceeded basically, then it is not a small company. So for small company, both these conditions, paid up capital 50 lakhs rupees and turnover 2 crore, they both need to be complied with it. Now, next important point is on a statement of changes in equity. See, changes in equity jo hai, that is basically applicable only in case you are preparing financials as per Indian accounting standards, Ind AS. As we all are aware that the companies who are listed companies, or the companies who are having a net worth of 250 crore or more, even if they are unlisted company, they all are required to comply with Ind AS. And if the company is preparing Ind AS, if the company is required to prepare financials as per Ind AS, it is subsidiary, associate, holding company are also required to prepare financials as per Ind AS. So where the company or the group who are covered under Ind AS, they are preparing financials as per Ind AS. In that case, the statement of changes in equity is required to be complied with it, which is required to be provided. And notes on accounts, I think this all forms part of the financial statements. And now, what is the financial year? I think financial year, which is been clearly made, there is no option. Earlier, there was an option that if you're this company, that company, then you can have their own company. But now it's very clear that your financial year has to be from April to March. There is no exceptions here. There are certain things where they allowed you can approach to the court tribunal to get a different year. However, it says that your year should be from 1st April to 31st March. Except, as I mentioned, that if you're a holding or subsidiary of a foreign company with requirement to consolidation, and if you're exempted by tribunal, because whatever practically your subsidiary of a company which is based in USA, holding company has a calendar year from January to December. In that case, what will happen that they will be more easier for the holding company if the accounts of subsidiary company are maintained as per the calendar year. So if that is situations, you need to approach to tribunal, and after approaching tribunal, you need to get exemption from that. One very important thing which is critical, and I've seen in many cases that it has been ignored, is in case a company is incorporated on or after 1st January. So, for example, on 10th January 2021, a company is incorporated. So, what will be my first year? My first year will be from 10th January 2021 to 31st March 2022. So, the first year in that case, where a company is incorporated on or after 1st January of a year, the period ending on 31st day of March of the following year. See why this is crucial? Because I have seen in practical situation where one of the chartered accountants fellow CA has basically has filed the financials for 10th January 2021 to 31st March 2021, just for the 2.5 months. Now, earlier it was not so much compulsion, and that may be tradition that let us file and let us close it out. The audit was done. The year was for that period. Audit was done. ROC filing was done. Everything was done. Now, if somebody challenge the technical competence of these particular provisions, it is always a doubt, because here in this provision, it is not giving an option. If I want to basically submit for March ended 2021 for 2.5 years, my financial year may not be for 2.5 years, because financial year itself says it is only for a period up to 30th March 2022. So I do not have option. There is no option for me to basically have a different financial year. That's why one has to be very cautious as far as the first year is concerned. If a company is being incorporated after 1st day of January 2000, after 1st day of January of the year, then you need to stretch to the next year end just to ensure that you comply with these requirements. And that's why we do not do any non-technical compliances. Now, with this, we are coming back to the section 129, which is on financial statements. On financial statements, First, we'll focus on consolidation. The section says that in case if you are having a subsidiary or associate companies, then consolidation is mandatory, and you have to prepare consolidated financial statements. And the consolidated financial statements shall also be approved by board of directors to be attached along with the same annual report. So that is what the requirement of consolidation. Now, when these provisions come into picture, I think one of the most crucial things which happened was that the definition of control as per the Companies Act 2013 and definition of control as per AS 21 and as per India's 110, they all are not exactly same. Principally, if you look at around 80%, 90% definition is same. However, not word to word is same. Anyway, there's a difference between AS 21 control definition and also definition of India's 110. The same way, there's a definition of third definition coming to picture, which is on Companies Act 2013. So if you look at a Companies Act 2013, it says that it is a subsidiary company where there are two things which are covered here. One says that there is a control over the entity's affairs, and second thing is that if more than 50% of total voting powers are being by particular company. So if a company is having a more than 50% voting powers, or a company is in a position of control, in that case, another company, the company to whom you control, that company is your subsidiary company. And second definition is provided is an associate company, where they use the word significant influence, and then it says that associate include a joint venture. So I think we need to look at one very important thing here, that the subsidiary is defined under Companies Act 2013. The definition of subsidiary is as per the section, and which focuses more on two aspects. One is control over the affairs of the company, and second, more than 50% voting powers is being owned by this particular company, that is a subsidiary company. Second very important thing is that subsidiary associate, for associate it is used significant influence. I think it is in same spirit of India's, also we can say more or less same with AS also. The both these definitions are little similar with AS and India's. However, there may be a situation where the particular company may not be a subsidiary associate, and it may be a subsidiary associate for the AS or India's. But when these definitions fulfilled, then consolidation is mandatory. And very important thing is that associate companies here include joint venture. Earlier, there was a mention of these joint ventures in the financial statement, consolidated financial statements, but now they removed it and they made it as a part of the definition of associate itself. And the definition of associate, it says that associate include joint venture. Now, that's why wherever the word associate has been used, it means that joint venture is a part of this associate. So joint venture is again is defined as where it is a joint control. So if you look at this definition, it says consolidation is a mandatory if you are having a subsidiary or associate. And for consolidation, subsidiary associate, we need to refer to the definition of Companies Act 2013. So the applicability of the consolidation is governed by the Companies Act 2013. And once it is applicable, how to prepare consolidated financial statements, that is governed by way of the accounting standards or India's as applicable to the company. Let's go next important point is on a format. This Schedule 3 format is basically governing the financial statements. Section 129, which focuses on financial statements, that first it focuses on certain requirements of the consolidation. Consolidation, if it is required to be done, then you have to ensure that the financial statements of consolidated financial statements are also approved by board of directors. They are also taken as a part of the notes on accounts, as it is taken as part of the financial statement annual report. And third thing is that the format of the financial statement is governed by Schedule 3. Under Schedule 3, there are three divisions. Division 1 is on accounting standards. Division 2 is on Indian accounting standards, and Division 3 is applicable for NBFC. So as applicable to a company, you need to prepare your financials as per the Schedule 3. Now, if you talk about the things where accounting standards, so AS or Ind AS does not provide exact format. Under AS, there is no standard which focuses on the financial statement format. Under Ind AS 1 focuses on a presentation of financial statements. However, the Schedule 3 is the governing format, and it will ensure the compliance with AS or Ind AS. Because under Schedule 3, Division 1 focuses on AS and Division 2 is focusing on Ind AS. One very important thing is the financial statements need to be laid. So financial statements need to be laid before annual general meeting. After approval from board of directors, the financial statements are required to be laid before the annual general meeting. That is what is required in section 129. And the compliance with accounting standards. So I think that is again being reiterated at various places that financial statements are required to be complied with accounting standards as issued by the Companies Act 2013 in consultation with ICI and NAFRA. So Schedule 3, as we discussed, which includes a Division 1, which is on AS, Division 2 is on Ind AS, and Division 3 is on NBFC. Now, focusing on the next very important part on Section 129A, there is a periodic financial results. In this periodic financial results, it basically focuses on one very important point, that this is a new amendment which is effective from 22nd January 2021. It provides the right to the government that they may prescribe certain class of unlisted companies. They use the word unlisted company, not a listed company. So because listed companies are already governed by SEBI, so the unlisted company has to prepare financial results on a periodic basis and such form. So basically, it focuses on first thing is that the periodic basis, you are saying they are not staying about quarterly, half yearly. So in the future, what I can foresee here that in the future there is possibility that the government may require unlisted companies where the borrowing may be very high or where the stakeholders are different. Then in that case, they may require with certain condition to provide and file periodic returns, which may be quarterly, half yearly, or any other periodic which government may believe. And it may require to obtain the board of directors approval and complete limited review or audit. So again, there is a scope which lies here that in addition to the listed company, if there are unlisted company which are a large size company which is covered under these requirements, where the governments want them to submit the financial statements, submit the result, and that the result may be subject to the audit or limited review by the auditors. And this may be required to file within to ROC within 30 days of completion of period. This amendment is effective from 22nd January 2021. Till now, the class of companies to whom it is applicable is not specified. But as this provision is there, I am very much sure that the government is under the mood to really ensure that the more filing, periodic filing, instead of waiting till the year end for 4 to 5 months till after the year end, they should get the information very fast where they feel the government money or public money is involved. Primarily, I think it may be for a case where the company is taking public deposits. There possibly they may get more information on this. But let us wait and watch how this particular section 129A is evolving over the period. Let me just take a few questions before I move further on. Okay. I just request if anonymous attendee can mention the name, it will be very easy. Let us look at first anonymous attendee. So electronic mode of maintenance books of accounts. I think basically it says that you, instead of maintaining books of accounts in your manual forms, you can maintain accounts electronically. That is, you can have a software, and the softwares may have cloud-based softwares. So that is also allowed. You can maintain books of accounts. Then, if the responsibilities of the management, when and why the auditors held responsible for any errors. Okay. So I think the question here is that about management and auditor. See, first very important thing is that we need to be very aware that the responsibility is on the management, but there is a responsibility on the auditor to what? To verify the financial statements. The management has the responsibility of preparing financial statements. The auditor's duty is what? As an auditor, duty is to review, audit, check, and then provide. So now there's a maker checker. If the maker has done wrong, checker's role is what? The checker's role is to check, and if any errors, to provide the report and then highlight the errors so that others can understand. If the maker has done wrong, maker may say it was by mistake, I have done it. Now the checker's role is to ensure that they need to review and give the reports. So that is the reason why the responsibility is on an auditor, because it is the job of auditor. The auditor has been there only for with this job, to review, to audit, and then identify the errors for that. That's the reason why the auditors has been, because if somebody has been casted the responsibility of the auditing, and if somebody doesn't do it, then there is a moral duty, there is a technical duty on the auditor's shoulder to see that we are being asked for in case why we are unable to identify the errors. Okay, so what are the consequences of auditor has signed audit report and balance sheet as on March 20 of a company who is incorporated after 1st January 20? I think there are a lot of issues which was there, because as I discussed about one case where this was happened, then there is no mention, there is no specific rules, there is no specific provision which talks about these things. But in my view, this is not to be taken as serious note, because nothing wrong has been done. Technically is incorrect, but however, in my view, in the next year, one has to again do audit and then they have to submit it. There is no consequence as such was done, because there was a small private company, and however, there is no provision is defined what to be done, what should be done in this case. But I think we have to take care. My only humble submission to each one of you is that please take care that that we should be aware and this should not happen. Now I'll just go focus come to the recommend, then we'll come back again. The periodic financial results we discuss. Next point is on the change of accounts. Let us look at the change of accounts. And the change of accounts, there are two sections which focus on these things. One is on reopening of accounts, section 130, and second is on voluntary revision of financial statements or director's report, section 131. So these two sections are focusing on the reopening of accounts and voluntary revisions. First, reopening of accounts. Here it says that the accounts can be reopened in case if the court or tribunal gives the order. But when the court or tribunal gives order, on application by central government, income tax, SEBI, or any person concerned, so section reopening of accounts will come into picture where there is a possibility, of the fraud or mismanagement. So this is again a very serious and issues. If there are serious issues which are possibly there, which are potential there, in that case, on the basis of fraud or mismanagement, on application by central government and income tax, SEBI, or any person concerned, they can make applications, and if the court or tribunal believes that this is the fit case for the purpose of reopening accounts, then it can be reopened. Accounts can be reopened up to 8 years. So unless a specific order by central government for a longer period has been given, otherwise the accounts can be reopened for up to 8 years. Coming to the next point is on voluntary revision of financial statements or director's report. Application by director. So now the question is, why somebody will do voluntary revision? It is actually difficult, because when I look at the section 130, 131, they both focuses on the very high level of things where the non-compliance happens. Reopening of accounts are completely on different footings. Under reopening accounts, it is only focusing on the fraud or mismanagement, which are a very high grievance kind of things. It is not a normal situations about section 130 is concerned. However, we will be focused on section 131, that is voluntary revisions, where it says that if the financial statements are not prepared in compliance with section 139, or director's report is not as per compliance with section 134, if that is the situation, in such case, the director can make application and to the tribunal, and the tribunal may allow However, in this case, the maximum 3 years in one financial, maximum 3 years can be reopened. So it can be voluntary revised only for maximum 3 years, not more than that. So these voluntary revision provisions are particularly applicable, section 131 are applicable, particularly in case where the financial statements are not prepared in compliance with section 129, or data reports are not in compliance with section 134. In that case, basically the voluntary way somebody can apply, and then to tribunal, director can apply to tribunal, and then if the tribunal gives order, they feel it is utmost appropriate, then tribunal may give order for the purpose of voluntary revision of these things. Just going back to the, I just try to identify which are the other ways, which are the situations where the companies may have done reopening accounts. So I just find one scenario which is a very recent one, where ILNFS case, in ILNFS case, the tribunal has ordered for the purpose of reopening the accounts. I'm just going through this word. The central government, after considering the fact that thousands of crores of public money is involved and in the public interest, moved the National Company Law Tribunal, Mumbai, seeking for reopening the books of accounts and recasting of financial statements of ILNFS and two other companies for the past 5 years. So there was a cap of 80 years as far as we discussed of section 130 of reopening accounts. They apply for 5 years to ascertain the financial mismanagement. After issuing notices to all concerned, including central government, income tax authorities, SEBI, other statutory regulatory bodies, and even to the erstwhile directors of ILNFS and other two companies. So this is what was done, and then the Honorable NCLT has allowed the applications, and they have directed, permitted reopening of the books of accounts and recasting of financial statements of ILNFS and other two companies for last 5 years. So this is what is being used of section 130 in case of ILNFS and two companies, where for last 5 years they have been required to reopen and do recasting. Again, when I look at the reason of this reopening, because in case of Satyam case also, the company, the tribunal wanted to do recasting and reopening the accounts. However, there's no provision under Companies Act. That thereafter, this section was introduced under Companies Act 2013, which focuses on these things. Let us look at on authentications of financial statements and Board of Directors report. The financial statements report should be signed at least by the chairperson, authorized by the board, or by two directors. One will be MD, if any, and CEO, CFO, or company secretary. So basically, it is to be signed by the chairperson who is authorized by the board. Then chairperson or chairperson has to sign, or by two directors. Out of two directors, one will be MD, if any, and CEO, CFO, CS. They have to sign the financial statements. Board of Directors report should include. There are a lot of things are there. I'm just going through just for the purpose of understanding, because I understand that in Board of Directors report, many things to be included. What is our responsibility? What is our stake? Our take on these particular things is that we just ensure that this is in compliance. So the first thing, if the annual report, if annual return, the annual return can be placed on a website, and the link of annual return is to be provided in your directors report, instead of placing the whole bunch of informations of annual return in the directors report itself. It is to be placed on a website and the link to be provided in here. Then how many number of directors meeting has been done, directors responsibility statement, fraud reported by auditor, if any, it is to be again discussed here. The statement of declaration given by independent directors, explanation or comments by board or every qualifications. So here is very important thing is that explanation or comments by board on every qualification. This is what we need to ensure, that every qualification, reservation, or adverse remark or disclaimer by auditor. So wherever in the auditor's report or company secretary's report there is some disqualification or adverse remark or reservations, the director's report must include the explanation or comment to the negative remarks, to the qualification, adverse remark, or reservations of not only the auditor but also of company secretary in secretary compliance report. Then there is also mention to record mention of section 186 on particulars of loans, guarantees, investments, particulars of contracts, arrangements, section 188, the state of company's affairs. Now I'm just focusing, as there's mention of a director's responsibility statement here. I've just taken the note of DRS. See, as you mentioned that the applicability accounting standards, as there was a question that what is the role of management? If you look at the director's responsibility statement, it again focused that in the preparation of annual accounts, the accounting standards are followed. So if you look at the way the financial statements preparation is concerned, the responsibility is cast upon the management. If you look at the financial statement, if you look at DRS, if you look at the management representative letter or this report, everywhere it has been made very, very clear that the responsibility of preparing financial statements lies only and only with the management, and they also have to ensure the preparation with the applicable accounting standards. Plus the accounting policies. I think accounting policy is very critical, which has been mentioned in the notes on accounts first, is a significant accounting policy. So the director has selected accounting policies which are critical, which are very important, and applied them consistently and made judgments and estimates that are reasonable and prudent, so as to give a true and fair view of the state of affairs of company. So here again, it focus on one thing: the account standards, accounting policy, and maintenance of adequate accounting records, and also to ensure the going concern basis. The financial statements are prepared on going concern basis. I think I again want to make some question which asked to me on liquidation basis. So I think here there will be issues because once it is going into the liquidation things, then the basis of preparation of accounts are a little different. So here it may be on different footing altogether. Then in case of a listed company, they have laid down internal financial control. So there is also mention of IFC for a listed company. So this is what is the requirement of section 136(4) section 5 on the director's responsibility statements. That is report. So we are just continuing with what we discussed here on BOD report. So BOD reports to include the amount, if any, which proposes to carry to reserves, dividend which is recommended, material changes, commitments. I think this is again a crucial thing, because I have seen in many cases the material changes and commitments are not mentioned, right? So subsequent events, I think there is a lot of focus on subsequent events. We also look at the accounting standards AS and NDS, which provides guidance on subsequent events. So subsequent events are events which happens on the financial statements reporting date, that is 31st March 2021, and the signing of the director's report. So the event which happens between the balance sheet date 30th March 2021 and the signing date of the director's report, they all call as subsequent events. So if any material changes and commitments which happens during the subsequent events, which need to be provided here in this energy outstation risk management policy, I think this is again a crucial aspect. The importance on the risk management has not been given by the companies in India, but I am very much sure that in the future, the risk management policy is going to be very big. And as far as the C is concerned, I think there is a huge scope as far as the enterprise risk management ERM is concerned. So there are a lot of things, a lot of company license companies which they want the chartered accountants or the consultant company to guide them and implement of enterprise risk management ERM solutions. CSR policy, I think CSR is something which is going to be there across the board, whether you focus on director's report, whether you focus on auditor's report, whether you focus on notes and accounts, everywhere the CSR is going to be there. That for a specific list of companies, it mentioned that annual evaluations of performance of board, committee, and other matters is being prescribed. Now, one thing which is critical is that if some disclosures are covered in financial statements, because if you look at these disclosures, they are very detailed. The director's report will go into a number of pages. So if something is already captured in financial statements, it is okay if you make a reference in your director's report. And CSR policy, instead of maintaining, instead of writing CSR policy in your basically data's report. You can also mention, you can upload on website, and you can give reference to website in your data's report. This is what is being allowed here. Now coming to the right of members to the copies of audited financial statements. Financial statements, which is including auditors report, CFAs, is to be circulated not less than 21 days before the date of meeting. I think 21 clear notice is required for 21 days. The shorter notice, this is again a practical situation which is happening in across many cases where we may have to provide a shorter notice. So shorter notice may be useful in certain case of UDIN compliances, or in other cases where your less time is available to ensure that you are able to finalize. Then you can go by shorter notice requirements, where company having share capital, if it is agreed by shareholders not less than 95% of the paid share capital. If 95%, at least 95% of paid share capital, they agree to provide short-term notice, then you can go by giving a lesser period of financial statements for circulations. So this is what something, this provision sometimes is practically useful where you have less time availability and there are issues and control on UDIN, and you may have to ensure that you want to get more time. So then this shorter notice will be useful. However, the only condition is that you have to ensure that at least 95% of the shareholder holding share capital, they give you consent. Then the shorter notice is possible. Listed companies, instead of sending to all the members, they can send a statement of salient features available for inspections, and they can place on website. Every company with a subsidiary, they need to place on website the audited accounts of subsidiary, foreign subsidiary. If not required to audited, then unaudited financial statements. So if you are having a subsidiary, then you need to place audited accounts of subsidiary company. Now the question which can come into mind, that what about associate? Am I required to prepare and publish financial statements of associate also on website? The answer is no, because the section 136 clearly talks about the word subsidiary. There is no mention of the word associate in the nature. Associate includes joint ventures. However, there is no mention of associate at all. So subsidiary financials only need to be placed on your website. In case of foreign company, what happens that you are subsidiary is out of India and it may be unaudited. So are you required to make it audited and then upload? The answer is no. If it is a foreign subsidiary, there is no compulsion on you, and even if you place unaudited financial statements of subsidiary on the website, it is a sufficient compliance as far as this provision is concerned. Now coming to one of the very, very important part is a NAFRA, National Financial Reporting Authority. See, there is a lot of debate and discussion. Even thereby mentioned about the NAFRA, and it mentioned about the things that what is critical for auditors. When the NAFRA comes to pictures, the first thing is that now ICI role has been diminished, ICI role has been removed. But no, that is not the fact. Obviously, there was a lot of pressure on the government to have a separate body which regulates, and with this objective, the NAFRA was constituted. The role of the ICI, as far as education is concerned, as far as the accounting standard is concerned, as far as standard of auditing concerned, the role remains where of drafting and preparing and the NAFRA is just to as an authority. The very, very important thing is that in NACAS earlier, the word was advisory. In NAFRA, the word is authority, and that authority has many more power compared to the NACAS, and the teeth which is given to the NAFRA are more teeth compared to the NACAS. So let us look at what is the power of NAFRA. As I mentioned earlier, that NAFRA is still in evolving stage. In last 7 to 8 years, we could not find a very big role of NAFRA, but however, I'm sure that now onwards, NAFRA will definitely be in more actions compared to what we have seen in earlier phase. So at least we should be aware about what NAFRA has authority. It has primarily authority to make recommendations on formulation of accounting and auditing policies and standards. Second, it is focusing on the monitor and enforcement of compliance with accounting standards and auditing standards, and to oversee. I think this is something which is critical, that it says overseas of quality of service of professional and suggest measure. I think that where I have a lot of I'm really basically worried here on a overseas quality of service. I think overseas quality of service is, I think, a very, very big thing where we have to be really sure that they want to ensure that the service which is provided by chartered accountant should be of quality nature. That is the reason why we need to be very critical, and we have to ensure that we comply with the requirements of accounting standards and auditing standards. And let us look at the powers of NAFRA. NAFRA has power to investigate either suo motu or on reference by central government into the matters of professional or other misconduct where NAFRA has initiated an investigation. No other institute can continue or initiate investigating. So what will happen that this is again a basically critical thing where it says that once NAFRA has initiated an investigation, that means no other institute. So ICI, if it is to handling the disciplinary actions, and once NAFRA come in picture, NAFRA handle the case, that means everything will go to the NAFRA. So please ensure that in NAFRA, they have a different mindset compared to the mindset which ICI has. Under disciplinary action procedures of ICI, we have the major representation from the members of profession. We do have the government nominees, we do have others things. However, we have representations major from the members, and the members of ICI, they understand the pinpoint, they understand the issues which may underline, which may have the reason behind this indiscipline things, right? So if something goes negative, what can be reason? That chartered accountants who are in the professions, they are in a position to understand this thing better than anybody else. How in NAFRA we do have representations, however, still the mindset of NAFRA is bound to be a different than the mindset of the ICI disciplinary actions. So we need to be really cautious as far as any proceeding which is being done by NAFRA. The powers are given same as kind of civil court powers are provided, and where professional or other misconduct prove. Now what will happen? Let's look at the case where some kind of misconduct is proved. Then what will happen? It says that if it is an individual against whom the professional misconduct has been proved, then in that case the fine will be 1 lakh rupees to 5 times of fees. It can be minimum 1 lakh to 5 times of fees. If it is a firm, so if the professional or the misconduct is on a firm, then the fees penalty can be 5 lakhs to 10 times of fees. This is what basically the imposing penalty in case something it goes negative. Also, it has a power of debarring, debarring the members or firm from being appointed as auditor or internal auditor of any company or body corporate, or for performing valuation, right? That so they also have a lot of responsibility that you can be debarred from being an auditor, or firm can be debarred for being appointed as an auditor or internal auditor of any company or body corporate. I think there is a lot of debate on these things, because in case of LFS case, in case of Satyam case also, so there are question mark as far as this position is concerned. How much power do NAFRA has? Can they debar the whole firm? Can they debar the only individuals? So they can also debar for firm or individuals, or for auditor or internal auditor, and of any company or body corporate or performing valuation assignments. Now coming to the next point is a section 135, which is focusing on the corporate social responsibility. So before that, let me just look at any questions are there. I think the questions are increasing very fast. Okay. Right. I think answer live is done. What are consequences if auditor has signed audit report? I think we will discuss. Then if the financial statements are prepared for more than 12 months, then how do you reconcile with filing tax return? If the financial statements are prepared for more than 12 months, obviously you would definitely have the in accounts, in your books of account which are prepared, you have two sets of accounts. One will be for less than 12 months, which is like 2.5 months, which we focus, and then 12 months. So yes, it was easy, sir. It is easy. I think as we maintain in softwares, from software you can generate the accounting financial statements for a period less than 12 months, and then you can file returns. Schedule 3 is applicable for, it is known as Schedule 3 for electricity company. There are separate sets of format financial statement which is going to be applicable for them. Sir, MCA should be informed within 7 days. Srinivasan, yes, I mentioned that it is 30 days, but I also mentioned during that period that the days we need to check. If you are so much cautious, I can also look at into the rules at these junctures and I provide. But I think number of days, I again request all of you, number of days are generally 7 or 30 days. So as Srinivasan has mentioned, I'm thankful to Srinivasan ji for bringing out the fact that within 7 days of shifting the books of accounts, it has to be mentioned. Thank you so much, Srinivasan ji, for bringing this point to this juncture. So my humble request that let us focus. I'm not exactly sure on number of days because there are many varied number of days are ranging here. So please look at the provisions of rules and then we can do it. I think. Yes. Okay. If account, yes. Books maintained in computer system, does it include in Excel or other DBS? Does it have an accounting package? Sir, you can maintain anywhere. Means electronic mode means you can maintain in computer system. You can maintain in any other mode. There is no mention that that whether you to maintain in which mode. If account is period more than 12 months, IT department, sir, IT department, you have to mention, you have to give the period which is required. As I have replied earlier that if 2.5 months, you have to prepare ITR for 2.5 months for ITR. And for ITR, you have to go by the 12 months or the period which is being defined by ITR. But for the purpose of the Companies Act, you have to go by this 14.5 months as far as financial is concerned. The company is having a joint venture AOP and not have joint venture company. Do we have to prepare consolidated balance sheet in JV AOP? Okay, Lakshmi Narayanji, you ask a fantastic question, sir. Basically, what happens that it says that if you are having a subsidiary company or associate companies, the word is subsidiaries or associate companies used, and under associate company they use the word the joint venture is part of associate company. So here joint venture is AOP, which is not a company. So in my view, this is if you don't have any subsidiary, if you don't have any associate company, and if you have only one joint venture AOP, which is not a company, then in my view, it is not applicable. Consolidation is not applicable as per Companies Act 2013. Now I'm coming back to the basically the CSR provisions. Let us look at the CSR provisions. Here section 135 talks about the situation where the mandatory if immediately preceding years there are net worth is 500 crore or more, turnover 1000 crore or more, or net profit of rupees 5 crore or more. If any of these things is there, then CSR is mandatory, and one is to see that average 2% of NP of 3 immediately preceding years we need to spend. So the CSR provision was being inserted with the view and objective that the government want the partners in the nation building. The government want partners who can also do the same activities as government is doing by way of helping to the needy people. So with this objective, the CSR was started. However, what was done, what was being seen here is that the CSR spending was not done for the objective for which it was done. That is the reason why there's a lot of amendment in the CSR rules. There is a lot of places where the data's report, notes on accounts, and auditors report, the responsibility cast upon everyone to check and verify the compliances. Here, one very important thing which I just put it here, link here is that now onwards, it has been clear that the CSR amount is to be compulsory to be provided. So, for example, if you incurred CSR expenditures, then it's okay. You can create a provision when you incur expenditure. You can create a liability when you incur expenditure. In case if your unspent amount Then also now the role where CSR spending was like explain, not explain, is changed to the compulsory CSR provisioning. That has been now modified, and it says that if the amount is not spent, you need to specify in the Baroda's report with the reasons and transfer unspent amount to the specific fund. At this juncture, I would just like to mention about the announcement issued by ICI recently, which focuses on the questions, FAQs on how to do accounting in case of the CSR amount remains unspent. So what we can do, I think it's opening. Okay, so we can just look at ici.org website, and then there is a question which is being given on CSR thing. So here, if you look at FAQs, on accounting for amount to be carried incurred towards CSR, where the ICI has given a reply that the CSR expenditure would be recognized as an expenditure in the statement of profit and loss as and when such expenditure is incurred on CSR activities. And in case for the unspent amount, a legal obligation arises to transfer to specified accounts depending upon the fact whether such unspent amount relates to ongoing projects or not. Therefore, liability needs to be recognized for such unspent amount as at the end of financial year as per para 17A of Ind AS 37. So basically it mentioned that now the earlier situation was wherein the CSR amount was basically, if you are spent, it's okay. If you're not spent, you can explain. Now that situation is changed. Now it says that you have to spend it. If there's unspent amount, there's obligation on you to spend tomorrow. So here it says that in case if your unspent amount lying still as on reporting date, you have to create a provision. That is what ICI is clarified. There's a lot of confusion on these things. You can refer to this particular FAQs and to get more information on these things. Okay. Now coming to last point of as far as the accounts is concerned, that is on internal audit. Internal audit compulsory section 138. In case of basically all listed company, in case of public company, if the paid up capital is of 50 crore rupees or more, or outstanding deposit is a 25 crore or more, or outstanding loan or borrowing from bank or financial institution is 100 crore or more, or turnover is 200 crore more, in that case this is applicable. In case it is a private limited company, then there are two provisions, like loan or borrowing from bank is more than 100 crore or turnover is 200 crore more. So that is what is basically the requirement of internal audit. So in my view, internal audit, even though it is not compulsory, I think it should be really followed by everybody as far as this is concerned, because this is going to really affect, and it's going to be very, very useful for the companies to ensure the controls are in place. There is somebody to check and provide the inputs to the management for strengthening the system. So this is the requirement of internal audit. Listed companies compulsory, public company, these are the four criteria, and a private companies where in these two cases it is compulsory. Coming to the next phase of audit and auditors, let me just look at any questions. I think there are many questions, but I'm just trying to take question in between just to see that we get. Okay, sir, 14 months का बात है. Let me see, sir. I think there are many questions on CSR. I can see, I can take one of the questions. Okay, in private companies, auditors report includes qualification. Does section 134 applies? If in private companies, auditors report include qualifications. I am not sure, sir. You're talking. I think you're focusing on basically the director's report, where we mentioned that if there's a qualification, director's report has to mention reason. Yes, sir. Even if it's private companies, if the qualification is there, the director's report should include the point with respect to the why the comments of the director's report as far as the qualification concerned. Coming to the next one point is audit and auditors. So in audit and auditors point, first is primary on appointment eligibility. I think just a minute. I'm just trying to. There is something where I'm. Okay. Okay. So auditors, there are main four classification buckets. One is appointment or eligibility, etc. Then there's a removal or resignation related provisions. Then there are panel provisions, and there are others. Appointment eligibility, section 139, appointment of auditors, eligibility, qualification, disqualification. So I think I'm not focusing now on very, very small things, but however, I'm focusing on very critical things, which is more on eligibility criteria, qualifications, which are critical things, then which are services which cannot be rendered by auditors, then removal or resignation of auditors, panel provisions, and others. Let us look at first very important thing on basically appointment of auditors. The auditor is appointed at a first AGM. So at the first AGM, to appoint auditor to hold office up to the conclusion of 6th AGM. So obviously the first auditors are appointed by the board of directors within 30 days of the company incorporations. If the auditor is not appointed within 30 days, then he can be appointed within 90 days of AGM. Again, to hold office up to first AGM. So when I talk about the auditor is appointed in the AGM to the sixth consecutive to the conclusion of sixth AGM, first AGM to the conclusion of sixth AGM. However, the first auditor is appointed within 30 days of the company's incorporations. If it is not by the director's report, then within 90 days by calling AGM. So that auditor will hold office for 5 years. For a term of 5 years, that is up to the conclusion of 6th AGM, first AGM to the 6th AGM. To ratify appointment to ratify the appointment at every AGM, the preconditions for appointment. I think one very important thing is that even if the particular auditor is appointed for a term of 5 years, every year at every AGM, it is to be ratified. Ratified is what? Not appointment. Ratify is basically nothing but it's talking about a point where you do to just say that you are still eligible, there is no disqualification, and you are available. So that ratification is required, not appointment at every year for AGM. Preconditions for appointment. For preconditions of appointment, first is the written consent of the auditor is required. Second is a certificate saying that the auditor is eligible for appointment and it is not disqualified as a section 141 is concerned. And the appointment which is done is within the term allowed, within the limit allowed, and disciplinary proceedings, if any, disclosed. So basically it focuses one thing is that the term. So term is like one term or two terms. It is within the term which is allowed. That is, there is no prohibition, there is no non-compliance for term is concerned. The limit, there's 20 audit limit is there. So within that limit which is specified there, and it is eligible, it is not disqualified, there's no non-eligibility is concerned, and there's no disciplinary person, if any, it is mentioned here. So I think this is a precondition for appointment. If the auditor is to be appointed, we have to get a certificate, written consent from the auditor that it is being compliant with these requirements. Company to file a notice of appointment with the registrar within 15 days of meeting. So within 15 days of meeting, company has to file a notice of appointment with the registrar. That is what is general procedure. I think we all are aware about because this auditor procedure is being done every 5 years. It is done, and I think this is a I am just focusing on one very important thing, that audit committee, board, and members at annual general meeting. This is the way the auditors are appointed. Coming to the next very important point is the rotation of auditors. The auditors, there's a limit on terms of appointment or reappointment. Restriction is applicable. So basically, for following class of companies, excluding OPC and small companies, the rotation is compulsory. So that means what the auditors need to be rotated for one term of 5 years or 2 terms of 10 years if the firm is there. However, this is not for all companies. All private limited companies are not covered here. Only the companies which are listed. One, if it is an unlisted public company with a paid up capital of 10 crore or more, a private company with paid up capital of 50 crore or more, and all companies having borrowing from bank or financial institutions or public of 50 crore or more. So these are the case. In case if any of the companies falling in this any of these criteria, then the rotation of auditor is compulsory. If you are an auditor as an individual, then there is a term of 5 years. So you can be considered for 5 years of one term. And if you are an audit firm, then you can be there for 2 terms or 5 years, not more than that. That is a restriction on this, and there has to be a cooling off period after completion of term. There has to be a cooling period of at least 5 years for completion of such term, which is what is rotation of audit is talking about. Let us look at the casual vacancy by resignations. So casual vacancy may arise by resignation, or it may arise by other cases. If the casual vacancy arises by resignation, when it is resignation, it is critical because the auditor has resigned. The auditor has resigned. That means it is it something which is need to be approved by the general meeting within 3 months of recommendations. So if the casual vacancy arises by resignations, then it is to be the directors has to recommend. It is to be approved by general meeting within 3 months of the recommendations. If it is arises by other than the resignations, generally by death, in that case, it is to be filled by board of directors within 30 days. So that is what is focusing on a casual vacancy. ICI clarifications, which is on, there is one clarification issued by ICI. Let me just see if it is working. I think this link is not currently working. I'll provide you this thing. So just to mention what is this link focusing on, that there is a clarification which is being sought by a member to ICI saying that it's an individual. There's difference between individual and a proprietorship firm. So a member who is an individual and a proprietary firm. So question was that whether the proprietary firm will qualify to be a firm, or proprietary firm is to be treated individual for rotation of for a term of for 1 term or 2 terms, because the word is individual and another word is firm. Now the one CA who is a proprietary firm is not an individual, or is it a firm? So the ICI has replied saying that in that case that a proprietary firm is called as individual, so it will be applicable of 1 term. He can only continue for a 1 term of 5 years, not for 2 terms, because even though the word used is a firm and individual, however, individual means it includes a proprietary firm. So with this, I'm going to the next point on eligibility as auditor. So if it's an individual, yes, individual is only if it's a CA. I think firm majority partners should be qualified for appointment, and if LLP is there, the only person with CA can sign. Ineligibility, the body corporate which is other than LLP, they are ineligible. Officer or employee of the company cannot be auditor. Partner or employee of officer or employee of the company. So I think if you just look at it, see, the standard is seems to be a very, very complex, where there are many things are covered here, but I think the focus is only on one thing. It is about independence of the person. When you are auditor of the company, the only focus here is that to see that are you in the state of mind which is independent. If your state of mind is independent, then you are in a position to function as auditor. Now, if you, so these are there's a list of things where the government believes you're not in a position, no, you're not in a state of mind to function as auditor. So that is what is the listing. So however, there cannot be principle, because in many cases there is a possibility that somebody may root out of these things, and then they may not be eligible also. So let us look at the one thing. partner, if you're officer employee, how can you be an auditor? You're partner or employee of officer or employee. So you're connected with by way of employee's partner. Then again, you are driven by the employee and that employee of the company. So you can't be auditor here. Then the person or relative or a partner holding any security or interest in a company, or it's a subsidiary, holding, associate, or subsidiary of holding company. So I think it says that now the question is on basically holding of shares. If you are a shareholder, so for example, if I am a shareholder of a company, and if I am a shareholder, I will be more interested to look at the pricing of this company, and I will be more interested in other things than the auditor, because I'm directly connected with the future of the company. So if you are holding a security of interest, which may affect your independence, which may affect a state of mind, and that is not a company only, a company or a subsidiary or a holding or associate or a subsidiary of holding company. In that case, here it says that you cannot become a auditor. However, if your relative, the relative, because there is a difficulty to really keep hold on the relatives. See, if you look at Companies Act, in many sections they are saying relative. Now I don't know about what the relatives are holding. There's definitely a lot of issues on relatives holding. So it's here it says relative is as defined in Companies Act 2013. So what is relative? Relative is your like father, mother, then son, daughter, then son's wife, daughter's husband, brother, sister. So there is a one layer of relatives cover. So if a relative may hold, you cannot hold. If you hold, you are ineligible. But relative may hold security or interest up to face value of rupees 1 lakh. So that is what is being allowed, up to face value of rupees 1 lakh it is allowed. And in case if happens that they hold by accidentally they hold more than 1 lakh rupees, in that case corrective action is to be taken within 60 days. So accidentally if somebody acquires and buys more than 1 lakh face value shares, then if they take the corrective action within 60 days, I think then it's okay, and then there is no ineligibility concern. Next point is on person or relative or partner is indebted to the company, or it's a subsidiary, holding, or associate or subsidiary of holding company. So in excess of rupees 5 lakhs. So however, in case if you're indebted to the company to the subsidiary, so I think I'm just mentioned as subsidiary of holding or associate or subsidiary of holding company. This is the same across everywhere, whether you should look at indebted to company or to the holding security or guarantee security, where the group which is covered here is same. And the focus is that if you are indebted to somebody of amount exceeding 5 lakhs, which is a material amount, then there are definitely a chances of probability that your independence will be at stake. So person or relative or partner has given guarantee or provide any security with indebtedness of third person to the company or its subsidiary or holding associate of subsidiary company, then it's covered. So next point is this is actually a very difficult to understand, because a business relationship, they're mentioning the point business relationship. How can you know business relationship? I think one point which is critical is that for ineligibility, don't look at these conditions. What is critical is that you ask question to yourself: are you independent? If you are independent, I think in most of cases your response will be correct. If you ask your question that you're independent, you get the response which is wrong, you're not independent, then I think the answer will be here somewhere where you may be not eligible here, right? So because it is a primarily focusing from the state of mind independence, here it says that if the firm or person has directly or indirectly has a business relationship with a company or its subsidiary or holding or associate or subsidiary of holding company, then what is business relationship? It is like any transaction entered into for a commercial purpose, except professional services in the ordinary course of business, sale of product or service to auditors. So that is what is focusing on here. Ineligibility, again, person whose relative is a director or in the employment company. I think that is very clear. If a relative is director, employment not allowed. a person holding appointment as auditor of more than 20 companies. Here, when you compute the 20 companies limited, other than OPC, dormant companies, small companies, and private limited companies having paid a capital less than 100 crore rupees. So 20 crore companies will not include this OPC, dormant companies, small companies, and private limited companies having a less than 100 crore rupees. If a person is convicted by a court of an offense involving fraud and period of 10 years is not lapsed, person would directly or indirectly renders any service under section 144 of the company or holding or subsidiary. So this is what is focusing on these things. So remuneration to the auditors. Let me just look at. I'm unable to go back to just a minute. Just a minute. I'm just trying to. Okay. Fine. Remuneration to auditor. Remuneration to be fixed in general meeting. Board may fix remuneration of the first auditor. Otherwise, remuneration will be fixed in general meeting. Remuneration to include or exclude fees payable to auditor, expenses incurred by auditor in connection with audit and facility extended. It should not cover remuneration for any of the services rendered by him at the request of the company. So basically, it is primarily focusing on any services related to auditing. Auditing then also focuses on expenditure which may be connected, which may be incurred by the auditor in connection with that, and however should not include any of the services which may be requested by the company to the auditor. Removal or resignation of auditor. Removal of auditor, the special resolution of company and a previous approval of central government is required. So if you want to remove the auditor, it is not an easy thing. I think the many cases the chartered accountants are struggling with this requirements of removal or resignations. So removal is not something which is very easy. Removal is only with the approval of the central government. See, and one more thing is that even though, see, I think if somebody has been removed, it should not be a very easy thing. That is the reason why when you look at the beauty of the Companies Act 2013, they provide you 5 years term. Even if you are under rotations, you are a 5 years term. So for 5 years you are going to be there. So what is expected from you, that only one thing, that you please do your duty. Your duty to be done diligently, that is what is expected. So that is the reason why it says that removal is not easy. One cannot remove somebody who's doing the right thing, who's doing justice to this requirement. That is the reason why if you want to remove, the special resolution is required and approval of central government is required. Resignation by auditor. The auditor has to file a prescribed form with the company and register within 30 days, indicating the reasons and facts. Appointing as auditor a person other than a retiring auditor. So basically, a special notice is required. If you want to appoint somebody who is other than the retiring auditor, then a special notice is required for resolutions. To send a copy of a special notice to auditor. Retiring auditor right to make representations. If representation made, to send a copy along with the notice to the members, or if received late, read out in the meeting. So basically, because the reason is that if you want to appoint somebody else, you have to give opportunity of being heard. I think this is normal case of giving an opportunity to somebody else, and says that you have to ensure there is something special. You can't make it somebody appointing somebody else and without understanding the reason why you are changing somebody else. So special notice is required for resolution to send a copy of the special notice to auditor. Retiring auditor has right to make representations, and if representation is made, to send a copy along with the notice to members, or if received late, read out in the meeting. Auditors not to render certain services. The following services are not allowed to be rendered directly or indirectly to the company, its holding company, or a subsidiary company. Accounting and bookkeeping services obviously cannot be provided, internal audit not provided. Design and implementation of financial services. I think there are few things where it is difficult to understand that is it allowed or not allowed. For example, taxation, tax representation. So tax representation is generally, it is assumed that it is allowed, it is not excluded. So if you want that, it is not, see, because the clause H says management services. So management services may be a very big gamut of services where it can be issues. However, we need to look at and make sure that this the tax services and ROC filing fees, these all are not taken as a part of management services, and it can be taken as something which can be provided by auditors. So internal auditor, actuarial services, investment advisory services, investment banking services, rendering of outsourced financial services, management services, and any kind of services. So these are the services which are which cannot be provided by auditor. Again, the word which is critical here is that directly or indirectly. If you are providing indirectly, then also it's covered. Now, what is it directly, indirectly? That we can see. Uh, Directly, indirectly means what? Individual either himself or through his relative or any other person connected or associated with such individuals, or through any other entity whatsoever in which such individual has a significant influence or control, or whose name or trademark or brand is used by such individual, which is covered as direct, indirect. And if we are in an audit firm, then audit firm itself or any of its partners or through its parents, subsidiary. See, look at this actually covers everything. Any connections, whether through a brand or through a significant influence, through some other company, through a relative. So wherever there is a possible to have an influence, and there is a possibility that there is possibility that the auditor is maybe doing the same activity and his independence will be at a risk. In that case, this is going to bar to provide other services. So these all are included here. Rights of auditors. Every auditor of a company shall have right of access at all times to the books of accounts and vouchers of the company, require information and explanation as required, and inquire the matters including. So here the auditor has right to look at a lot of information which include loans and advances, transactions. These are merely represented by books and entries, assets of companies sold at price. Now, when I look at these things, it only provides you the basic informations. There is no clear list. So when I use the word here, if you look at here, word, it says what? Including. So when the word is including, that means what? It is only the indicative list. As an auditor, whatever you want, you can ask that information from the company. So you have access to anything, everything which is required for you to carry out the operations. That is what this particular thing is talking about. And if you are an auditor of holding company, then you also have a right to access to the records of all its subsidiary and associate company insofar as it relates to consolidation of financial statement concern. So if you're auditor and if you want to do consolidation, then you have right to access to also subsidiary and associate which are covered here. So you have right. The only thing is that you have right to you would access the right in such a fashion that you are able to justify the duty which is cast upon you as auditor. Right. Next is auditor's report to include. The auditor's report to include about the sought and obtain all information explanations, proper books of accounts maintained, proper returns adequate for purpose of audit received. So I'm not actually going through everything, but in my view, what it says that you have the audit report should include that there are many things are there, and I'm just putting the matters here that the observation comments of auditors in financial statements or matter which have adverse effect on function company, data disqualified, qualification result adverse remarks, informational IFC, internal financial control system, if any covered. So IFC applicability. So as you are aware, the IFC is applicable only in certain cases. It does not apply to private limited company, which is OPC, small company, turnover of less than 50 crore as per latest audited financial statements, or aggregate borrowing from bank or financial institutions exceeds rupees 25 crore. So unless this, if you're falling, then IFC is applicable. If you are part of OPC or a small company, or where your turnover is less than 50 crore or borrowing is less than 35 crore, then in that case you are basically not, IFC is not applicable. Auditor's report shall include what? The pending litigations, provision made for material forcible losses, delay in transferring amount to IEPF, Investor Education Protection Fund. And there are few clause D is omitted recently, which is focusing on SBN reporting, specified banking note reporting, which is omitted now. And there are clause E to G, which are added by Amendment Rules 2021. So if the time permits, I will focus on Amendment Rules 2021. Otherwise, we'll skip it. Auditor's report will include where any of the matters required to be included in the audit report under this section is answered in the negative, or with a qualification the report should state the reason thereof. Okay, I think a lot of things we discuss. Let me just take the few things on fraud reporting, because if we just make a summary of what we discussed as far as rights of auditors is concerned, the rights of auditors are there to ensure that the auditor is able to carry out the duty which is tasked upon him. As far as the independence is concerned, as far as the eligibility is concerned, then it is clear that eligibility is with respect to clear state of independence. As far as you are independent, then you are able to carry out the task which is required. So let us look at now next important point on a fraud reporting. See, fraud reporting is generally not relevant for many companies. However, in certain cases it is critical, because if the potential fraud amount, if it exceeds 1 crore rupees, then this duty is cast upon you to report to central government. If the amount of fraud which may be there, if the amount is less than 1 crore rupees, in that case there is no need to report to central government. However, if the amount exceeds 1 crore, then you have to report to central government also. Now, the fraud, which is the reporting fraud by auditor, reason to believe that an office involving fraud is being or has been committed in the company by its officers or employees. So one very critical thing here is that it says that the fraud being committed by officers or employees. So it is not talking about third party. If there is a fraud being committed by officers or employees, then it's covered. If somebody comes out and say that third party may have done something, so that is not covered under here. It says that if your reason to believe, that fraud is being or has been committed by the officers or employees, in that case, if the amount involving is 1 crore or more, then you need to ensure that you report to central government. So report to audit committee or board, and audit committee board to within 2 days they should seek reply, and within 45 days. So basically, first your report to go to audit committee board, and then you to get a reply within 45 days, and thereafter you have to give comment and forward report to central government within 15 days of receipt reply. If you are given the report to the audit committee board, you don't get any reply, then after 45 days you can give a report to the central government. But if you receive the reply within 45 days, then immediately you should, within 15 days of getting report, you should give the report to central government. And when you give report, you do give report to the secretary MCA by registered AD or speed post, followed by an email, and report should be on letterhead of auditor with address, email, telephone number, mobile number, and signed by the auditor with a seal and membership number. Report should be in the form NET4. So this is what is in case of the reporting of fraud, which is more than 1 crore. If the amount of fraud is less than 1 crore, so in that case, your responsibility is to just comment and report to audit committee or board. So within 2 days of your reason to believe that the offense of fraud has been committed, you have to report to audit committee or board specifying nature of fraud with the descriptions, approximate amount involved, parties involved, and it is to be disclosed in the board of directors report the details of fraud as per above and remediations taken. So two things: if the fraud is a 1 crore more, report to central government; fraud is less than 1 crore, report to audit committee or board. And then you to ensure that the director's report should also include the amount, the nature of fraud with descriptions, approximate amount involved, parties involved, and what is the remedy action taken. That is to be part of the board of directors report. These provisions of fraud reporting also applies to secretarial auditor and cost auditor. Now, coming to the very critical part is the penalties for contravention. Now, this table is the reason is that we need to really understand in case if the provisions are not complied with it, there will be a huge possibility of the penalties. So this table will really remind us that we need to ensure that there's a compliance with the auditing standard, there's compliance with the accounting standard, there's compliance with the Compliance Act requirements. So first thing 142, if on resolution by auditor, he needs to intimate to company and ROC and maybe CAG. So if there's contravention, then auditor or firm is penalized with 50,000 rupees remuneration, which is less. So I'm not narrating the all penalties because we have a positive time availability. So what I'm saying is that we can just, I will provide you my PPT which will include all these listings available. But one thing which I would like to draw attention here is that here we have to be very crucial as far as the recovery is concerned. In case there's contravention by the auditor, even by the company, the penalty amount is very huge. There is not a small penalty. Just look at this one. Just look at this one. Basically here, if I just focus, if something is done without knowingly, then minimum penalty is 25,000 rupees, maximum 5 lakhs rupees, or 4 times of remuneration as auditor, which is less, and you have to refund remuneration, pay for damages to the company. So something, even if it has been done without knowingly, then 4 times of remunerations, or the amount which is mentioned, which is less, and you have to refund remuneration and pay for damages too. Now this is a very big thing, that you have to pay damages to company, authorities, members, or creditors arising out of incorrect or misleading information. So your liability is very high. And then same way, if it is done willfully or knowingly, then also there's imprisonment, minimum 1 day to maximum 1 year, plus fine, and plus you have to do refund of remuneration and pay damages to this. So I think the responsibility is very, very huge. I think we need to be really cautious as far as this thing is concerned, because the way the reports are being signed, the way it is being done, I think there's need to have a drastic increase in as far as the our skill is concerned. Drastic need to really increase our efforts, and there has to be a system in place in our firm where we are able to ensure that the report when we sign, it is really complete in all due respects and in compliance with these requirements. A liability audit by audit firm. So here the focus is that in case if there is a liability on the audit firm, and for criminal liability, the criminal liability is restricted to only the partner or partners. However, the penalty fine amount, the liability extend to all partners and audit firm. So liability as far as criminal liability is concerned, it is only to the particular partners who has been involved as a part of these things. And the auditor has to sign the audit report, obviously, and it is to read before the company general meeting. And as far as the auditors to attend general meeting, auditor has right and duty to attend general meeting, and it is right to be heard. So if anything is where auditor wants to point out, then which is related to the business, which concerns the auditor, it has right to be heard, and auditor has to be attended either by himself or through his authorized representative, who shall also be qualified to be audited. So either auditor himself or some CA who is qualified to be auditor, that person should attend the meeting. Now, I think there are few amendment rules of accounts and amendments rules. I'm just taking very fast, as I understand that we have a few, it's only 8:03. So I'll just take 2-5 minutes for further to go through this. See, audit trail. The audit trail is compulsory. It is effective from 1st April 2022. I think this audit trail is going to completely change the way the accounts are being maintained. Now we need to make sure that the software which we use for accounting purpose, it should have the audit trail with them. And that audit trail should have the recording of each and every transaction. I should have created an audit log of each change made in the books of accounts. So just look at these provisions that out of India, there are a lot of softwares like QuickBooks, Zoho. They already have audit trail. in Europe and also in USA, the laws and regulations required that the software should have audit trail. However, in India, this provision was not there. Now it mentions that the software which you use, accounting software which you use for maintaining most of accounts, that software should have the audit trail features, and there is responsibility also cast upon the auditor, that auditor also has to basically confirm that these particular audit trail provision are being complied with it. A few very important things are there. Rule 11 is modified, where the fund circulations, I'm not taking focus on these things, because the fund circulations, there are a lot of changes in Schedule 3. The Schedule 3, there are around 25 changes at that Schedule 3. And in CARO 2020, the provisions are exactly from Schedule 3. If you got some time, what can be done? Then when you refer to CARO 2020 provisions, there are many changes which are there, and based on the CARO 2020, the Schedule 3 has been modified. So these changes, which focuses on fund circulation, the fund circulations requirement is such that if I have advanced a fund to B or C, B person, and B has given a fund to C, C has given fund to D, the Schedule 3 requires that the company has to disclose in notes on accounts basically the money has been received or given for not a company to whom the money is given, but for some other company. So the fund circulation, the focus was to a control on the fund circulations that is to be disclosed by the management in the notes on accounts. The auditor, there is responsibility on the auditor. The auditor has to review, check the disclosure, and if the disclosures are correct, then the auditor has to also report in the audit report. CARO 2020 and the auditor's report, they both have modified in this fashion. So with this, I am not taking much time here, and I know there are many questions. I can see there are 43 questions which are still left, which I need to respond. I will try to respond as much as possible. Otherwise, obviously, my phone number and email ID is there, and then I will be in touch.
Yeah, sir. Chintan sir, you already taken some questions.
Okay.
So I think very only minimum around 20 is left, and up to you, sir. If you want to take now, you take. Otherwise, we'll send it to you so that you can give a reply, and we'll put in our website. Otherwise, we can do one thing, sir. We'll send a Google sheet for the people who are asking. They can write a question in a Google sheet so that we'll share it to you. Then later on, we'll put in the website.
Yeah, I think that is fair, because I think time is already being more than 2 hours, and continuously.
I'm sorry we could not give a break for you in 5 minutes. I think you have taken like Rajdhani Express and very beautifully covered.
I was trying to cover as much as possible. I'm sorry if I'm a little bit fast here, but I was trying to cover as much possible.
Very, very brilliantly covered, sir. And Daya, sir.
Thank you, Chairman. Chintan, I just dropped a message to Aniket that you made it, the second, on the pitch, there are two people, who is on the opening batsman and the runner. So you have played the game fantastic. I think
Thank you, sir.
That is how Hyderabad always looks at. And I think the coverage which is being done, rather, I am sorry that we have not given you more time. These topics require 3 hours of deliberation technically. But you have tried your level best to justify, to touch upon the most important and crucial sections of this chapter 10 in a very detailed manner. I think that is something which we would really like to appreciate. And friends, I think you all will agree the kind of, lucidly, the simple way he's put forward every chapter, every section of the chapter so beautifully. I was just looking at your presentation, Chintan, with regards to audit, with regards to NAFRA, with regards to, IFC implementation, with regards to relative definition, with regards to every aspect. I was just, working on this side, and I was listening to your session, which actually, because I also wanted to go for a refreshing of certain section. So, but, the new provisions which you have talked about, I think everything is fantastically taken up. I don't have anything more to say, because if I have to justify anything, only thing I can say is, you have done the best job. In this 2 hours, I think the best possible thing you could take up on the chapter 10, you have done it. Fantastic. Thank you very much. And having regional council members like you,
makes a whole lot of difference, because that subject knowledge and the way you are actually deliberating, that's something which we all would like to have seeing in at the regional level also. And at the branch level, our Machar Rao chairman himself is a good speaker on valuations as well as on the IBC. So we feel really very good. So that is how it is. And our permanent chairman is, we cannot actually, we don't have ability to assess him. He is a fantastic orator in the entire format.
Yeah.
And really great. Thank you very much.
Yeah, Daya sir, actually, while taking Chintan a class in auditing and accounts, really I remember the recent case, sir. One chartered accountant with 54 years of age, almost 20 plus years of experience. He called me and asked me simply, sir, one of my client has not paid a fees and I will log into MCA because I'm sitting empty in a COVID time. And I saw that some other member has signed the balance sheet for the last year. And where to I need to report, how to get the fees? This is a question really shocked. See, because all our center council members and institute from the morning to night, they are shouting on all the channels wherever possible. Simply they are saying that please read a code of ethics. We are having I think approximately there are 33 sections and a very small green book. And I think 1 or 2 sections already repelled, and schedule 1, schedule 2 only is there. That too, schedule 1, schedule 2 is not more than 8 pages there, by if I'm not wrong. And schedule 1 only 4 parts is there, part 1, part 2, part 3. This talks about a professional misconduct. Out of that 12 to 4, not more than 17 clauses are there. Out of that first schedule, professional misconduct, first part clause 8 is only 1 line. Sir, I'm telling you, person like me who came from a small village, Telugu medium student, I can understand simple 1 line. Any auditor is accepting assignment of the previous auditor, first he has to take a confirmation from the auditor. That is a single line. But this 54 years of age of a chartered accountant is asking me where to complain, what to complain. This is a class. Where next immediately I call that fellow. He has given a number. He's around 25 years and 2 years back he started his practice. He's saying, sir, I don't know whether I need to take confirmation from the previous auditor first. I don't know. Then I asked the boss, auditing final year class, you have a code of conduct, and approximately there is around 12 to 20 marks question is there, and this class is there. Then he's simply saying, I don't know, sir. That means this 3-4 years of experience guy is also doesn't know about what you are saying. Just now you told that accounting and bookkeeping, first you told is a chartered accountant auditor should not do. And very unfortunately, that the businessman is simply saying, sir, I don't know, that young fellow came to me and he wants to do it for 50% of fees, which is charging by 50,000 by the old auditor, is doing for 25,000. This is an invoice. And this invoice is also came to me. Very unfortunately, the invoice is saying that preparation of accounts and finalization of accounts 25,000. That's what I'm seeing your presentation now. I immediately linking this both. This 25 years guy is also doesn't know what we are doing. That 54 guys also don't know where we are doing. That's what I'm requesting Central Council members, sir. Please make mandatory of this accounts and auditing also CPRs, like what you have done for a peer review, what you have done for a professional code of conduct. Over to you,
Chairman. One thing which I would like to say,
yes,
very importantly, because these are very sentimental issues which are there. Let me just put it this way.
Yes.
And unfortunately, yes, ignorance is not an excuse in court of law.
Yes,
and more importantly, when the power of act is given to find faults with or mistakes in the financial statements of others, how can there be a situation where we are having mistakes in ourselves? That is not as expected out of chartered accountant. Chartered accountant is little above all these things, and we need to actually ensure that, not only this, as you rightly said, when we sit in the disciplinary, Banu sir, one more important thing is we are actually seeing continuously the kind of complaints which are coming in these 2-3 kind of clauses, which is the previous auditors of this thing is not taken, or might be fees is not being done. So these are all critical factors which are actually going, and unfortunately, Chintan, you will agree with the audit trail. The audit trail is not only for the accounting transaction now. When you are doing any accounting mails, WhatsApp, SMS, detail, everything today is trackable. And the moment you are actually finding it in a wrong direction, and many people, Machar, unfortunately, I'll tell you, when you talk about money laundering and other cases, some people are just signing without even knowing the background of the entire group, and the signatures are being put by the auditors. That is something which we have to miss out. We need to make people vigilant about, not because of ignorance. They might not be doing intentionally. With ignorance also, that is a risk. And the risk is on the profession, not on an individual again. So, but however, I think we need to take one more session on the same topic, Chairman. And we will initiate, rather than doing it for 2 hours, we'll do it for 3 hours with little more detailed discussions on what are all the mistakes which are happening also. I like to actually, here we had very short time. I wanted to come in between and tell 2-3 things. But again, because of limitation of time and the number of slides we had.
As you told me also, because we are giving a speaker time, but not more than 2-3 minutes we have to speak. That is what Hyderabad branch has decided under the directions of the Dayabai. So we don't want to take more than 3-4 minutes.
Yes. So my point is, Chandan, thank you very much for coming in.
Yeah. Very nicely explained, sir. Spellbound presentation and very lucid presentation. Rightly, Dayabai said, it's like one more Aniket from Ahmedabad, and you're also now please now requesting not to contest for regional council from Hyderabad, because my Bonu sir is also contesting here as a regional council. Jokes apart, sir, we really thanks from Hyderabad branch and from the entire delegates who has participated for this webinar today. And a very really actually beautiful presentation. You covered elaborately each and every section what we decided earlier. It's like nothing but each and everything. We feel that each and everything we know, but it's a refresh and refresh, like Dayabai told. So fantastic, sir. 141 and 121, all these sections. Thank you so much. And as a token of thanks, we would like to request you to accept our certificate of appreciation from the Hyderabad branch. And everything gets normal. We really send to you the physical copy to your physical address, sir. I request you to accept the same, sir.
Thank you so much.
Yeah, thank you.
My special thanks to Dayabai for giving me invitation, sir.
Actually, sir, it's not coming, sir.
Yeah, now it's coming, sir.
No. Yeah, now it came.
Yes. Yeah. Now I can see. Wow, superb. I think this is something new, something for first time I'm looking at it.
No, sir. This was started under the dynamic leadership of Pankaj Kumar Trivedi, sir, the immediate past president. And the previous year also he has done almost more than 130 presentations. Now the responsibility of mine to send each and every speaker this one. And I'm also following the same legacy.
Great.
Yeah. Looking forward to continue support, Chetanji, and over to Secretary.
Yeah,
thank you,
Chairman.
Chintan, sir.
Yeah, thank you, Chairman, sir. Thank you, Chintan bhai. It's my proud privilege to offer a vote of thanks on behalf of Hyderabad branch of SIRC for this 3-day virtual seminar on company sec. We thank all the speakers of the 3 days, CA Avinash Shravani from Mumbai, CA Ashish Vakida from New Delhi, and CA Chintan bhai from Ahmedabad. The selection of the topics and coverage of the speakers are so excellent that it's actually a brainstorming session for everyone for the Companies Act, as Dayabai has told. All these 3 topics are relevant to our day-to-day practice, and analysis and explanations are so good and beautiful, sir. For this, we should give our special thanks to all the speakers, and next special thanks to our CCM Dayabai and Chairman of Hyderabad branch Machara Garu for selecting these topics and bringing the good speakers. One more person we need to thanks giving is our past chairman of Hyderabad branch, CA Bandarendra sir, for patiently taking up as a moderator for three days and taking all the question and answers. Special thanks to Banu sir. I assume all the land members got benefit from these 3 days virtual seminar. We thank all the participants once again for their continuous support and learning interest with full-fledged attendance all these 3 days. I thank our immediate past chairman Pankaj bhai and my management committee colleagues for their active role and participation. We thank all the staff of Hyderabad branch for their actively involving and support. Dear members, on 24th May, that means Monday, we have a program on new dimensions in internal audit. Internal audit 3.0, internal audit for SMPs by CA Amit Gupta and CA Samir Mittal from 5 p.m. to 8 p.m. Request everyone to register in advance.
Satish, small interruption. Here, past President Ramaswamy sir also is joining for a keynote address. Very incidentally, he started his internal audit practice in Hyderabad under the guidance of Lakshminivas Sharma-ji, the father of our Dayanavas Sharma. And he just spoke me yesterday when I'm called for a keynote address on the same day. So members, request all of you to join and utilize in opportunities. And Amit and Samir are wonderful speakers and they are from Big Four. and that is one internal audit. And second one on 30th, I request 2-3 minutes of your time. And 30th, we have very good session on will, inheritance, and family settlements. This is a legendary speaker, CA Girish Ahuja, sir. Yeah, Girish Ahuja, sir. And request all the members to utilize this opportunity on 30th. And next month also we have planned, and I think I requested today morning Daya sir to one DAB series, like all the technology. He's a techno man and a techno futuristic. That's what I requested, one series on DAB, like forensic audit and information system audits and tools which are required for a forensic audit and information systems audit, and the tools which are required for a small and medium practitioner. This is what we have planned morning, Daya sir and myself. And one more also we are planning, sir. This is on international taxation basics as a that's also 3-4 days. And along with this, for an young members and like me, who also background of Telugu medium and all, not like Bonu sir, who is like a Shakespeare in our managing committee. This is a course on a drafting, and pleading, which is also by the 4 speakers. We are planning for 4 days as an income tax, including appearing before NCLT and NCLT, IT80, and appearing before IT80 tribunals, and preparation of a documentation and agreements like state purchase agreement, etc. And what is important legal terminology in a drafting an agreement, etc. We are planning this also. And request all the members, please visit Hyderabad website and register yourself and encourage us to do more and more programs. And thank you so much for your patient hearing. Over to Secretary. Thank you.
Thank you, Chairman sir, for the updates.
Yeah, Banu sir.
Please.
Banu sir.
Chairman has done so much work, so it's time for us to compliment him. Chintan Bhai, our chairman is Virat Kohli, Sachin Tendulkar, Steve Waugh, and Brian Lara put together, because always for the programs, the attendance, the minimum attendance is 250 and the maximum
300 plus, sir.
300 plus. 300
Amazing.
Minimum.
Congrats to you, sir.
maximum was 594. So,
Sorry, Banu sir. 880.
My God.
No,
880
that was by Atul sir when Atul sir and JB sir spoke on code of ethics.
Yeah. I think I was not present on that. So we creating records, and law of averages is not catching up with him. So wish you the same success, and go full steam and make all of us from Hyderabad proud. And let us do this knowledge sharing to all the members. And because it is virtual, I think we have a pan-India attendance. So thank you, Chairman, for planning this, and thank you, Dayabai, for encouraging the Chairman and giving him all the support in organizing the speakers.
Sir, this is just because help from the managing committee and regional council members, more particularly Dayabai is a big brother for Hyderabad branch. And this is, we could able to do this just because of the help from all the members and particularly delegates actively participating for all the seminars and webinars. Thank you, Banu sir, for your kind words.
Yeah.
At the end of the day, Banu sir, Machar, all the managing committee members, Chintan bhai, one thing I would like to take on record when whoever is there, the kind of effort which has been put by Hyderabad branch even on the COVID assistance. We are not marketing. I am really happy that Hyderabad branch is doing a fantabulous job. We are not putting any message or any publicities anywhere. We are just doing it only because we have to do it. It is our moral duty and responsibility.
Sir, I request you to announce about oxygen concentrators. We got that, and any member is required for any of them.
So I don't have the privilege of telling chairman and immediate past chairman. I can only take on record that the one discussion which we had very strongly was that we will not market the work which we are doing anywhere, anytime. Anyone is going to reach us. We have sent messages. You are having a track of every support which you have done. Really, really hats off to you all people that you are doing a fantabulous job under the guidance of Bhanu Anna. Particularly, I'll tell Bhanu Anna now, not Bhanu sir, because he's like an elder brother who's guiding all of us in a very, very positive manner. Bhanu Anna, one thing I'll tell you, there are multiple branches which are doing their own way. We cannot say which is right and which is wrong. But at least our way is not to market and not to move forward in any kind of publicity stunts. So let us do it when it is to be done in a particular manner. And with regards to concentrator, I request you people only to participate. You only announce. My thing is the smallest. I think it is not even so small contribution.
No. There's a lot of support from your side, Bhaiya. Bonus, sir, please announce we have concentrators.
Friends, Hyderabad branch, we have purchased 3 concentrators because the concentrators were in shortage at the time we ordered, and it took quite a considerable time of more than 10 days for us to get physically into our position, and they are available at the branch. And chairman, anybody who is having a requirement can fill up that form, that COVID app of Hyderabad, and we will be giving it. And we are going to give it free without any deposit, and it will be for a maximum period of 5 days. But the only thing is, if any damage is there, you have to take care of it. And it is basically restricted to CAs and families of CA members and CA students and their family members. So we are trying to buy more concentrators. God forbid that
chance should not come.
Yeah, we always pray that you should not have that requirement, but in case you get a requirement, we are there in a small way. We are trying to help out. Not only that, we are also trying to reach out to more people like who can supply concentrators, and the team, the volunteers of the SICASA students, they have done such a wonderful job that the database is updated up to date, and any request we are catering to, and we have got very good feedback from the people who have utilized the services of the team. Only thing is the medicines which are not being supplied by as per the government orders, only that we are not able to help out. Other than that, everything we have been helping, including remdesivir and this tocilizumab in the initial days. Now it is not permitted. Government is directly supplying to the hospital, and we are already getting requests for the new drug, that is 2G or 2D. But that is also still in the trial stage, and it is not launched in the market. Once it is there in the market, maybe we'll do it. But again, I'm telling, we pray to God, the entire managing committee, the RC, comprising of the RC members in the CCM, we pray to God that you should not require the services of our assistance team, but in case it is required, we are there.
One important thing, Chairman, what I wanted to tell everyone is now also I received 3 messages for vaccination drive.
Please.
Sir, friends, I would request you, one thing is basically now it is very difficult today in the current situation where vaccination is at very, very short. And I'm in touch with the Secretariat, Chief Secretary also. We are trying to put forward our foot very clearly. But the fact is very simple. Now they have stopped giving anywhere vaccination because the stage 1 or stage 2 is not there, and there is a lot of complexities which is going in. There are a lot of messages which are being circulated across the length and breadth of the country, and a lot of people are receiving from this branch, that branch, everything is being done. Trust me, if we are able to share knowledge to this extent, you also trust us to a level where, Banu, I have to use the word trust here, no doubt. But only fact is, if we are able to organize these things, we obviously would like to organize vaccination drive also. But let the government also get settled. And when they are going to have a quantum and where it is going to be independent, where they can give us some assurance that this number of vaccinations we can give it. We assure you one thing, where we will ensure that, we coordinate with the government and ensure that there is a separate lunch which has been made out for the chartered accountants and the families also.
Yes, sir. Adding to you, you have also, Hyderabad branch has almost met more than 6 hospitals, which are the big hospitals in Hyderabad, with the help of their auditors. Our senior auditors only helped me to reach the hospitals, and everybody is willing to do that. But as per government guidelines, as Daya sir told, so no vaccine is not available today, and if something they got it, immediately they will help us. We are on the job, sir. Thank you. Yeah, Secretary.
Yeah, thank you everyone for the updates. Once again, thank you, Chintan Bhai. With this, we are concluding this 3-day seminar on Companies Act, and request everyone to be safe and vigilant by following all the government guidelines, and be safe always. We are turning up for today and wishing